Um, Flat and open-minded, and basically the price is telling us is sort of align ourselves for the day. I mean, and that's stuff I've learned in here, stuff I've learned over years. Also, trying to decide. It seems more difficult for me when actually that's a really hard thing to do. And I think one of the best things that you can do maybe trade short side with a small position just to have a feel for what that short side feels like when you're in the trade and stuff. But then when you trade a long side position, maybe you go a little bigger, so that's something I play with a little bit. And yeah, I agree. I mean, it's kind of, I like the way Manny, you and others have taught me, honestly. Like it's okay to have pre-planned trades, that you plan overnight or ahead of the open, so that you sometimes do have these pre-planned levels or trades based on not the market action. So you're not kind of trying to jump in and out in an emotional manner. And I think that the priority level of long versus short is a good way to also kind of accomplish that too. Or like if you're trying to trade one side only, I actually asked Niels the other day, said, hey man, everything you're doing with the trader platform is fantastic. Like the risk management and all the stuff he's putting in is so cool, and really, really helpful. And I said, another thing you might consider is having a button or a box that you can click where it only allows you to trade long side, long side or short side only, whatever your decision is. I said that would be something I would use all the time. So anyway, I mean, part of what I do here is APR. Three base. .9 and one. To match what that value is. So 49.9 is the 5-day ATR range. And then I just pull it down here and I center it on the close of the Globex session right there. Okay, and so then when you're looking at these things, you can look at this on the pre-market move we had based on CPI. If you just move this box up, you can say, oh, well, I think the low of the day is in. And it just gives you a depiction of how big of a move we just had, you know, including the overnight session, which you don't always have to do. But it gives me an idea, number one, for targets, number two, for how exhausted a move might be. And I just do this on my charts quickly in the morning. And it'll take a little extra time for me again today, just being a little slow, but that's okay. Let's see. Here is YM. So YM's current ATR is 561 points. So just to make it easy, I kind of do this for myself. And then again, I just drag it. So here's the centering price. Interesting that the YM was weak. I know there was this news yesterday and big, run up in yields yesterday, and the market sold off. And so now here we are again, and we get a CPI number that's good. And it's another just sort of moment where, it keeps continuing to thread the needle, where it's like, oh, this is getting worse, and then, oh no, it's fine. So I'm not sure what to make of this quite yet. I think that the funny way of saying it is, oh, inflation's a problem, buy the market. Oh, unemployment's getting worse, buy the market. It basically, like, what I'm saying is, buy the market, buy the market. It's like long trades only kind of thing. Oh, crude is coming way off, buy the market. Oh, crude is rallying, buy the market. So anyway, I'll just keep moving along here, but 5-day ATR on NQ is 620 points. So take my box here, 30,620, 30,000. Move that down. Okay, or move it up. If we think the low of the day is in, just stick it on the low. Look at that, you guys. Look at how precise that already is. From the overnight low, CPI news comes out. Look at exactly where that stopped. Okay, and you tell me that's not algo magic right there, Algo magic, algo math, as I like to call it, is algo math. these things, they use the numbers, right? So make sure if you're not using the numbers that you at least know that if that's how these things trade, you know, at least for your runners and where you're trying to see how much profit you can get out of a trade, it's an easy way to demonstrate what kind of potential we have left. Okay, so then I'll simultaneously, this orange line is the RTH open. So I simultaneously adjust those. So 29, 8, 11. I know we also have this Warsh testimony and lots of other Fed speak today. So this could be really a wild day. And then we've got the, what is it, PPI tomorrow, right? So yeah, I think we're back into this mode we've been in where this has been the sort of the best trading environment I've seen over a summer period, personally. But so it's like we should be trying to take advantage, and doing what we can to take advantage and make money in these kinds of markets, because when it returns to a little more normal volatility, you kind of look back and you say, oh man, why wasn't I pressing this stuff and really trying to make money here? So we'll see what kind of trades we can come up with. Here's the ES trading right now, $80 for the 5-day ATR. I mean, overall price action, like to me, it really felt like we had set up and that the market was really like expecting and looking to go back to all-time highs. When the news came out about the war and what was it yesterday on the rates, that one of the Fed people had some talk about rates and stuff, right? So that's what really spiked the yields. And at some point, yeah, the yields should actually make a difference. And maybe that point is now. Maybe it's imminent here. But I think it's not, I don't expect the market to rally on the fact that the Fed would cut rates to maintain price stability. However, I do think that that's a good thing. I think it's very good to hear that the Fed, is hawkish and willing to act if they need to, right? To me, that's a really big risk that we have here with all our fiat currencies and all this specific dependency on the dollar as the world reserve, and it's been so for so long. But and then all the money printing we've done throughout COVID and everything, even prior to that, we've been in a bull market for a long time. And does that stuff start to reverse, or do cryptos start to disrupt? It's like now people are adopting into all of this crypto stuff, but at what point does it actually start disrupting the way we trade around the world, right? Not as traders, but as countries, right? So anyway, here we have our yellow box on the ES, and again, look at the precision there on the overnight low to the high of the day. And it's not a coincidence either that it corresponds to, these highs kind of thing. I mean, obviously price is going to go and search for where the support and resistance levels are. And those are based off of also previous highs and lows, volume profile, and all that kind of stuff. So finally, crude oil. This is the fun one for me right now because I was telling people in my room, I know that the technicals matter, and that's exactly what happened with crude. Is it had to come down and fill that gap, technically speaking, right? But shame on all of them for trying to push crude all the way back down to that technical level and that gap at 67.5. Shame on all of them, and I hope they all get their faces ripped off still trying to be short crude oil. Guys, do not be short crude oil right now, okay? I don't know what else to tell you. I was telling the room that the other day. I was saying I'm not necessarily getting long here because the ATR had contracted so much that I had a no trade filter on crude. But I was telling the guys in the room, this is way overdone, and Wall Street or whoever has been pushing this price down for the last, what was it, 25% or 30.9% drop in like 25 days in crude. That was absolutely ridiculous. Okay, so now what do we have is a big gap to fill on the upside back at that 83.5 level, something like that. My question is, does price stop there? My hope, honestly, is that it doesn't. I have long crude oil exposure, oil and gas in the family business and stuff, and I expect things to go a lot higher, and they don't have to stay there, but we could and probably should, if we're in a raging bull market and a super boom economy, we probably should be trading at 100 or 150 or higher in crude. And if anything, that's this whole war stuff should be telling us that crude oil, is like the kind of thing that could be the new reserve currency. I mean, the world operates on crude. It's not going away. That need is not going away. I know they're making some headwinds and all that, but yeah, exactly. JMO, when's the Trump tweet? I mean, I don't know how they get away with pushing markets around, but crude does get pushed around more so than it did back in the day when it would trade. It averaged more of a 700,000 or 750,000 contracts a day now, and it averages 250 a day. It's a lot easier for them to manipulate it, and that's one of the reasons why I don't trade YM and RTY that much, is because they're pretty thin, and crude trades thin now. It's almost as thin as gold, right? So you can look at some of that stuff to filter whether or not you want to take risk in those instruments. If you do, you just have to be prepared that the moves can be sharp and fast, and they don't give you, like anything right now, right? But especially in some of those instruments, it can be brutal to try and trade those. So let's see, Delph, I think, had a question here. The top of the yellow box is 5 days ATR. Yes. Well, from top to bottom, right? So when I'm highlighting this, I'll change it So this was previously at like, it had gotten down to like $1.95 in crude oil. So now the ATR has jumped back. The 5-day ATR has jumped back to $4.09. So I just take this number 81, call it 09, and $4 is 77. Okay, so now that box is adjusted for $4.09 range, and then just to try to come into the day neutral in terms of my sort of opinion on it, I center it here. Let's see. I center it here on the bar that closed right before the close of the futures markets. And then you can adjust it however you want, right? So again, if you think the high of the day is in for crude, you know, because maybe we get a pullback now with the CPI number, there you've got your highs of the day. You could expect it to trade back down to 77, which would be pretty normal, right? There's some big numbers. The pivot is 76.40. The 200-day is actually 74.20. So I'm not surprised that when it started moving to the upside, it overtook that 200-day and really shot up. But you can also do this the other way. You can just move this up, assume the overnight low is our low of the day, and you could get a target today of $82. And of course, you could get something that moves a lot higher than that as well. You can also use these boxes and ignore the overnight action. If you like to ignore it, ignore it. You also don't need to do it as a box on your chart. You can just know what the ATR is for a 5-day period. And especially if you have a runner on a profitable trade, maybe don't be so quick to cover that, right? Because you could be covering it and instead it goes another $2 or something crude. So anyway, I mean, that's part of the reason I developed this system, is to help me sort of sit tight, because I personally have learned over the years, just for myself, that when I wait to take my first trades, I do better. I don't tend to, if you don't tend to like trade well off the open and have a really good idea of exactly what you want right when the opening bell happens, you know, ding ding, here's the opening bell, I'm selling this thing short, like, or buying the gap, you know, a gap down, and gaps are good for that kind of thing, I think. But I personally just, if I jump into the trading scene right away and then I take a stop right away, it rattles me. And I know that about myself, and I'm trying to control myself better with that stuff. So let's see what I'm reading the comments. So we've got Hunbo says, don't be long crude, or here's right, run the disclaimer. Yeah. What I was saying was, don't be short crude. I didn't tell anyone to buy it. I wasn't buying it. But I was telling people, do not be short crude. And here we are, $13 later. So I should have bought it, I guess, right? Sort of silly not to, right? All right. So we had this big news spike. We've got the Warsh testimony coming up. I don't expect a lot to happen before that. Pretty mixed board here. Advanced declines open 550, traded up to 1100. Now they're coming back a little bit. Mag 7, quick glance. Yeah, some selling, but on a big gap up, right? NVIDIA's, well, let's see. I probably need to update my screener. Yep. So still a pretty mixed board there. You had this reversal now in the yields and in the bonds. So that's what I mean. Like, it's like every time we think that something's gonna break one way or the other, it seems like we come out with another print that's like perfect and just like threads the needle perfectly. But the way I like to trade, for those that have not watched previously, I like to basically look at the opening price. If we're above it, I'm just assuming that we're going to try to put in a green candle. And if we're below it, I'm going to assume that we're going to try to put in a red candle. So that's my simple and easy first kind of filter for the day of how and what side of the market I might want to be on. And then the other are just my moving averages. I use a 1 minute chart for my execution typically, and my 15-minute charts are my higher time frame. And of course I look at the other higher time frames as well, just periodically, just go in and change them for a quick glance at what's happening. But I want to see basically the moving averages sloping up, and I want to see price above the open to be a buyer or to be taking long side trades, and then vice versa for my short side trades. And then the other thing I like to use is the advanced declines. So when the advanced declines are above about 700 or so, I'm of the assumption that yes, we might be putting in some kind of good trending price action. Sorry, just reading some live squawk here. Okay, so when the advanced declines are pretty flat and you have a mixed board, then that can be a very choppy kind of trade action. And obviously you can just use the charts to figure that out too, right? Let's see. So let's adjust this one on YM, okay? All of these others, we used the overnight low Let's see how precise this is on YM. Overnight low. So YM exceeded its ATR already. So it's like one of the things that I just consider is how much energy it's taken for something to move a full ATR, right, in the overnight. How much energy did all this buying take up when it spiked like this? And you know, it can be one of those things where, oh, now the buyers are exhausted. Shorts have covered. There's no one left to buy. And so the weight of that could cause the market to sag, and who knows, right? I think the print was really good. So I'm a little more optimistic actually than I was when I came in last night. I got home kind of late. It was like a 12-hour day. We did a really cool, what we call the rock and roll. So now we've started doing these really long approaches on our mountain bikes. Well, I don't own a mountain bike. I'm not a mountain biker, but I get lured into some of these adventures with my buddy. So we rode like 5 miles in on our bike, just got off and left the bikes, and then hiked with our climbing gear for like a mile or a mile and a half up to this $500 foot cliff there above the trailhead, above the trail. And then we climbed this route on it called Arching Jams, which is like one of the best rock climbs in Colorado. And then we go back down to the bikes, hop on the bikes, and it was like another 24 miles of downhill. Almost all downhill. There's like a 2-mile section where you do a pretty big climb. And so I'm like toast. My legs, I can hardly feel my legs right now. But it was, we started riding at 9 a.m. We got back to Brad's house at 8:30 p.m. So it was a big day. Maybe I'll throw up a couple pictures if I can. But so yeah, when I saw the news and the yields from yesterday, I really came in kind of a little concerned here for the morning, right? But then we get the CPI print, and it's like, oh, perfect. A great CPI print. Now the Fed can back off a little. And, you know, if we can just stay on pause for a while, I think that's really kind of what the market wants. Market doesn't mind hearing some hawkishness, but they don't want to see the hikes. You know, they just want to see this thing even out a little bit, and everything's predictable, and they know what's going to happen, and that's what, you know, allows them to keep buying in the pullbacks. That's my opinion, but I don't know. Let's see, I can share some of this other stuff, like here's just as a quick kind of, let's see, let me do it in here. Just as a quick sort of show and tell, like this is the second screen that I have that I look at, and then here's the third screen that I look at for my trading. And I'll take these down here pretty quickly. But just so that you can see kind of all the different things that I look at when I'm trading. So the top one is my left screen, and those are my main charts, my main execution charts, and what I'm kind of watching in the futures markets to trade off of. The middle screen here is where I watch the ticks, and then I watch the bond markets, and then this is my 1 minute on crude chart, and then obviously the pit and my chat and everything here. If I want to jump and check my email real quick, or my Google Calendar or whatever, I use that as kind of a little area to. And then on the right side, I have the advanced decline chart up on a 1 minute, and then I watch the Mag 7 here, and I've got the S&P 500 stock heat map over here. So the thing that I like about watching all that stuff together is what I'm trying to do is get a feel for, say, a breakout of this range, right? We shouldn't probably get a breakout of this range until we hear Warsh start to talk and something he says, right? But what I want to see is, like, when price starts going bid across the board, when I start seeing everything on my screens ticking higher, then it's like a peripheral thing for me that I'm seeing all this stuff going green. Okay, Bo, don't be a fool and don't fade or take stupid trades that aren't according to your plan, is probably more the way that I should say it. It's like, okay, let's say that Warsh says something good, the market likes it, whatever. Things start to go higher. You're seeing everything tick higher. Well, okay, then let's focus on the long side of the market. And again, for me, what I'm expecting here is the price to come back up into this area, have the moving averages continue to form this sort of sloping nature to the upside, and then look for pullbacks to buy. So I'll go ahead and stop sharing those other screens just so it's not confusing or difficult to watch. And I'll watch and wait here. The other thing you can do right now is look at your levels sheets from yourself or from me or whoever, Manny, whoever else that you use. So on mine, on the ES, we opened at 79.5. Pretty good open. RTH compared to the Globex session open, which was 57. We're right in between the pivot, which is at 72.25, and R1, which is at 97.5. We have a weekly pivot of 74.5 and a monthly pivot of 74.25. So do you think in your mind that the 74s might be an important level? From an algo math perspective, I think yes, right? You want to see those levels hold if you're bullish, and you want to see us move out to new all-time highs, which I think, again, before yesterday, I was thinking, the market's acting pretty well, and it's acting like it sort of wants to have another leg higher. And let me reshare it. It might have changed when I did those other ones. Thanks for letting me know here, Terry. Let me just stop those. Start this again. Entire screen 1. Now that should come back up, right? Okay, if we're looking at the NQ, currently trading 709.5, is up to 716, 70. Yeah, you can't even call the action, it's too fast, right? But around 720 here, RTH open was 811, but the Globex open was 446. So interesting, again, these ranges are wild for summertime trade. But what else do we have? We have the pivot in NQ 619. We have R1 at 851. So look at that rejection of R1. After the news, we had the spike news event, came back down, traded back up to $847.75, then $849.5, and couldn't even retest that level before now probing to the downside here. Let's see how our weekly and monthly pivots compare. We have a weekly pivot of 691. We have a monthly pivot of 914. So let me blow up this chart on NQ on the 15-minute chart. The other thing you saw was these are really pretty much perfect measured moves, I would guess, right? So from 307 low to 637, it's 330 points. Went from 577 to 917. I'd have to do the math on that one, right? 30, 60. It's basically 360 points. So you can see it too with your mind, right? Here's your move, sideways, moves, perfectly measured, hits the top of the ATR box, and now you could have this scenario where either things go all the way back, do like a round trip all the way back to the bottom of this box. If that happens and then we break the lows, we're in trouble, right? What I would expect now is we've got this upsloping moving average, and that can be a really good buy point, right? So right here, they could be sweeping some liquidity below the weekly pivot of 691. And the question is, are there enough buyers to step in and hold this support? And so I'd be looking at them to recapture the 691 level on NQ, and then ultimately the 700 level, and then see if they can get this thing ripping back up to the upside. So if you're using your 1 minute in conjunction with that, I don't know how many of you guys are trading NQ or micro NQ versus ES. I know, like in the prop world, a lot of traders use the NQ. I think it's so hard to trade. For me, it's actually, if you're going to trade it, you need to chart trade it, because you can't use a dome. It's too fast. Everything's just going like crazy. But so here we go. Okay, we got a nice little reaction there off of what could have been a liquidity sweep. Now can it reclaim here? Again, I was saying the 691 would be maybe an important level, but it could be important in the sense that it fails. Okay. So maybe it comes down here and hits the pivot again at 619, which is just right in the middle of this range that was pre-market before the news. We have a nice test happening here in the ES. So this is our longer moving average off the 15-minute chart. Was somewhat downsloping. Now it's started turning up again. You tested it perfectly there, that one touch. And now it's trying to test it again, and it's a potentially really good buy point. If they reject these and hold them, now you have the stops that are built up above these levels. So, but for my system, I'm now technically looking at, okay, we're below the open. The 1 minute is starting to roll over. If this rejects, so I'm looking at, this could be a short setup, because if this rejects here, you've got stops below this, stops below here. If it undercuts hard and they start selling it for a while, then this longer time frame moving average will also start to roll over. So kind of not a lot to do here, but at least when you have a bias for yourself, you can also decide where are those potential holding points, right? Where is the support coming in, and then where is it, what kind of action do you want to see in order for that to confirm whatever theory you have? Yeah, 75.70. I mean, the beauty of this level right here is whether you use a tight stop on it or not, I mean, you can use a wider stop in terms of a new stop, and then you can also use your mental stop and just say, look, if I'm trying to be long right here, I don't want this level to break at all, right? So from a mental perspective, you can formulate those kinds of things and just say, yeah, it might be worth a try right here, whether you're buying another breakout or whatever, or whether you buy with smaller size or however you like to do your system. What I'm trying to do more of these days is develop a sort of an automatic strategy whereby I just add a couple to a trade that's going my way, and that way I'm hopefully going to take advantage of a market sweep, and then cover a couple as the liquidity comes in. But it sort of just depends on what the day looks like and what the setup looks like, and right here, it's a pretty easy kind of like, if you're doing a quick risk reward on this, it works sort of both ways, right? Because if you're wanting to be short from around the open or something, you can see where your stop goes, and then you can just quickly gauge, well, like, what if it just does a round trip down to the bottom of this box? And vice versa. I mean, because it's just set up really nicely in terms of the sort of the range structures that can break if they break one way or another. Reading some of Rev's comments here on crude. Hey Rev, what's happening, man? Seems to me like we got a good CPI number. Crude might not like that as much, and you'd maybe see a reaction to the downside. The fact that it's holding up as well as it is, based on that, I'm like, I still wouldn't be short it here personally. But again, for transparency's sake, I have long interest in oil and gas business. So I want this shit to go face ripping. Okay, we're getting a little break, getting to the 619 level in the NQ. That's the pivot, daily pivot. Let's see if it holds. I haven't even opened my trading platform yet, so for what it's worth. Could knife right through, looks like it wants to. We have new lows on the advanced declines, trading down through their open. So now 495. So oftentimes this setup can be quite good if it's a larger time frame reversal setup, where you can sweep down through this low and then get a short on the retest of this. But it could also reclaim it and then move right on up through. So it's a very good level to watch here. And you can take quick trades and scalp out of some quickly often, you know, when you get action around this moving average, this longer time frame, 15-minute moving average. We still have 9.5 minutes left for the close of this 15-minute candle. So I'll take a short break here, grab another cup of coffee. I'll be right back. All right. So nice little liquidity sweep. It recaptures that bigger moving average. Let's see if they can recapture the open here. Where do they want to close this 15-minute candle, right? If you're looking at this on the ES, what I like to think about with range bound trades is that often you get this mirrored kind of image on the candles, right? So when we had the spike up, you can kind of measure. This is one other way of looking at a different type of measured move, right? Is what's the size of the wick on this candle? It went from 613 3/4 to the close was 88. So that's 26 points, something like that. And look at the way this candle's developing, right? Sometimes when you have a range or an expanding range, that's something to watch, because you get, here's your wick this way. It's quite possible they put in the wick this way. It may not be quite as large, but let's see where the candle closes, because it's still about 20 points, right? If it closes up here, you still have about a 20-point wick on this side, about a 24-point wick on this side. And it doesn't tell us a lot. It just tells us that price has established this wider range. But it's curious to see some of these banks being super strong today. I wouldn't expect that after the CPI number and the reversal we see in bonds this morning. I expected it from last night, so it could be that they come in and they have their minds made up that, oh, they're adding exposure to the banks. Could be that it's short covering ahead of some of the earnings. I don't know, when did that stuff, maybe it came out this morning. That's maybe what I'm missing. But now you've got these, this is really important stuff that goes along with the timing of the earnings on the banks. Is what are the bond markets going to do in reaction to CPI and PPI and the Fed? So I find it interesting, like maybe it is just some short covering, or maybe they're piling in, and could be the next element of AI that feeds into the banks. And now the opening price is another really important spot. And what I like to think about in terms of the opening price is there's so much volume and so much big institutional volume that takes place on the open, that anytime price returns to the opening, I expect something to happen. Now, it doesn't always have to be that way. Like, this is a very choppy period through here. But when you start to see, extended thrusts in one side or the other, the kind of the principle goes is that if they had a lot to execute at the opening price, typically they don't get it all executed, right? So typically they have more to buy or sell if it returns to that price. So it's one of the easiest things you could use in a trading plan in terms of a level that you never have to really think that much about, right? It's the opening price. It's there every day. It's easy to identify, and it's an easy thing to say, like, yeah, here's a theory, right? I have no idea. I'm not saying this is exactly a strategy I use or anything like that. But if you're looking for ideas for different ways to theorize, and then, back test or just try it with some trades, it's like you could come up with something like, if price immediately trades above or below the open, you can say, like, if you get a thrust one way or another on the open, that the retest should be a good place to reject, for instance. Or you could say that a retest now becomes a good place to see that move extend in the opposite direction of whatever the move was off the initial thrust. So you could say, we broke down here. When it comes back up to here, now it's set up really nicely to catch the shorts and move higher. So once it reclaims the opening, then that's maybe an idea of, okay, maybe then I should try to buy that, right? You see what happened here. They couldn't gain any traction on that. It came down and swept through that low, which frankly, it validates the low and it validates the short side kind of price action for the time being, right? And just validates it until it doesn't. But what I'm getting at is, however you like to frame your setups, if you start to feel like, oh, the market has more to sell, then look at how perfectly it rejected the open on that first touch. And then it may not follow through. It may just go higher from here. But if you're getting, a trade entry in here, you easily get 8 or 9 points potential just to cover a couple legs or one leg or however you like to do it. It gives you plenty of action there to get some off at a profit. And then you can put your stop break even and you get stopped out, right? Or you decide, hey, I'm going to test this again. Oh, I tried it here, and then boom, and get stopped out. Or you didn't get stopped out because you used a wider stop, maybe, but look at the way that can work for you. NQ is another pretty good one here. Okay, like they sold the open, and so that's the theory, is like, okay, well, if they sold the open, then maybe they have more to sell if it gets back to the open. So it gets back to the open, doesn't even tick through it, gives you a nice trade, gets back up there again, rejects again, right? All right, so let's see if I could get my trader platform going. You guys have any questions or thoughts at the moment? Anything that you'd like me to discuss, or questions on my level sheets or anything like that, let me know. Yeehaw. Trading in the summer during war. And guys, I mean, to answer your question, Chris, I don't know. I'm guessing that's just a tweet, right? But what I want people to understand and think about is how that trade develops, and how that it's a positioning thing, right? Like, once they broke it down there and recovered, I mean, people like me who like to short, those are spots that I should have been shorting, right? But because I'm kind of sitting tight and waiting, I didn't short. But the reason that spike exists is because you have everyone starting to pile into their shorts in here, into the short position. You already have a lot of stops up above these levels. And then when that whatever news comes out, it only takes, this goes back to Mark Douglas, right? Trading in the zone. It only takes one trader in the world to negate the outcome of your edge, okay? And why is that? It's because someone comes in with a market order to buy. Okay, we had 16,000 contracts print on that 1 minute bar. So at least, half of those are people selling into it who are probably long, right? And half of those are somebody covering, like, just hitting a market order to buy to get out of their short. And it's because, as they were shorting in here, then they reach that uncle point and their stop gets hit, or they just decide, I need to get out of at least some of mine, so let's go ahead and sweep that. It's not like they're saying let's sweep it. It's just a function of how that positioning plays out, right? And so that's why I always think that it is a really good idea to have an order in, especially on the exit side of your trade, of a profitable trade, to just have an order in case something like that just happens. Because it happens a lot where sometimes you get the fill, and then it gives you a chance to reload that. If you think this news is real, this should be a perfect place to enter on the long side, right? Or you can say, now you have the same setup happening on the opening print for any traders or banks or institutions that needed to buy. If they need to buy more, the opening print should hold. If it tests there again, they should come in and support that. And if you want to go back to the ATR stuff, you can use this yellow box ATR to also show you, what if we ignore all the overnight price action, and this is our RTH low of the day, and the market wants to move higher because of the CPI print. So put that box right there at the low, and you see where it can expand up to, all the way back up to the 36s without even taking out that all-time high again. You get the feeling here that the closer we get, the more they're loading up long in anticipation of a move through that 76.50, right? So oftentimes I use the box, that ATR box, to just give myself an idea here. What does it look like? What does it look like if we also put in a 2x of the ATR, right? The ATR is $80. What if we put in a 160 point day in the ES, from this low that we just made? I mean, it may not be likely, but it's possible. Where was everyone trapped from yesterday? Look at RTY already almost put in a 2x ATR on the day just with that print. That's how thin it trades. But if you do the same exercise here and drag that box up to the RTH low, you can do that here. You can do it on the YM. Look at the YM, just, right? And then let's do it on NQ and see what it looks like. Looks a lot better on NQ, right? Because we're now further below those all-time highs. So I mean, if this is our low of the day here this morning, and we actually get up through these levels, it seems like we could fulfill the ATR here pretty easily, but also expand it some and retest even up into here. I mean, that's obviously, it takes the right kind of Fed talk or whatever to get that going, but I like it, I think it's possible. So but you want to use these little ideas to conceptualize whether the support or resistance is real. right? All they did here on NQ was run some buy stops back up through the open and through the RTH high. And now they've rejected again. So is this the moment that they actually start buying NQ for real here or not? Let's check the levels again. Okay, we have trading 745. We have our pivot, our weekly pivot that held at 691. So that becomes a pretty, again, like, does it hold here and doesn't even retest that weekly pivot, or do they bring it back down into the weekly pivot here and then they sell the weekly pivot, right? Watching the ES, if this was a real, demand for things, they should come in and support the open here. Remember how perfectly coordinated the levels are on the ES. You have the daily pivot at 72.25, the weekly pivot at 74.5, and the monthly pivot at 74.25. So do you get a chance to see prices below that again today or this week? Like, oftentimes the pivot can be, a sort of a chop fest too, where it trades in and around the pivot for quite a long time as it's trying to decide what the next move might be. But these opening price trades can be really, really good and precise. So if you like using a little wider stops, it's not a bad one to go for here. Is, either you're buying it at the open with a wide news stop, but your mental stop could be just below these pivots at 70 or something, right? So that can give you like an 8 or 10 point stop on an entry that, if it really goes, you could get a big kind of move back up towards these all-time highs. And the point is that the positioning from yesterday suddenly became really obvious to be short, and then when the CPI comes in and it's a good number, everyone has to correct, right? Because now they don't know what to do, and the more you go into a summertime slow trade, thin market, don't short a dull market, all this sort of old adages about that kind of stuff. Then, other traders that are long only come in and they trade off that so that they keep, if they keep supporting it, they know that there's stops above. So let's see if the NQ can hold that 691. It's sort of testing it right now, right? Below this bar was 92.5. Let's see if they go through it and sell it, or do they test it, run a couple stops right below it, and then go ripping to the upside. Sometimes you'll see that on the opening print as well, where you can buy it if you're looking for an entry based off the opening print. You can do precisely at the open, or you could do a tick above. You can also do a few ticks below to see if you get that false breakout. Sometimes you get that and it's like that's all they were doing was coming back in, running those extra little stops there, and then they start moving it back up again. So far, advanced declines are holding. They're between 530 on the day. Mag 7 looks okay. I mean, you're seeing some bidding in Meta, Microsoft. Nvidia is not too shabby. Google. And then the tech high flyers, it seems like, are relatively green. I'm sure they were, I wasn't here again yesterday, but I'm sure they were pretty heavy red probably yesterday, right? So this sort of just supports sideways range bound. We used a lot of energy in the overnight and in that CPI print. I don't know. For some reason, my charts aren't coming up here. My trader. Do a little feedback on this. Nice little stop run below that 690 level, 691 level. Let's see if they can rip it now. See if I can get into something here. Oops. Try putting this over here. Try one at 82. No. Yeah. Try one at 81.25, just maybe. It's like I missed it. Yep, agree, JM. Hey Niels, how you doing? All right, now I've got my oh, yeah, I forgot to open my G chat this morning. Yep, got it. So this is sweet because now I wanted to have Niels's chart up. So this is Trader platform. For when I'm looking for my executions here. So we had the thrust up. We had the moving average start to slope back to the upside, but we still haven't gotten NQ to get back up through the open. But if resistance was here and it becomes support, then we should be trying to buy this little retest of it and it should hold, right? So, it might be worth a try here at 84 and a quarter. Things look a little choppy again right in this moment, but I'll try one here and see what happens. Kind of wanted it at 81 and a quarter before, but Yeah, come on. Okay, well, that worked out. That was really quick. I couldn't stay with it because it was so quick. I got too afraid. At least I made $500 on that. That's what I'm trying to do with adding to my winners, is take a very small initial risk on a trade. And it's like, man, if you if you get one that works and then they sweep the liquidity your way, I'm trying to think of it like this, then yeah, I could be scalping out of that and holding one. That's ideally what I should have done right there, but I got a little scared of it. But in the past, what I was doing is I was taking a bigger size with a stop, that then if the stop just got ran over, then I would have lost a lot more on the initial entry, and then trying to scalp out. And I still kind of like trading that way to an extent. So I'm not abandoning that altogether, but I'm trying to figure out, how can I do this in a way that I'm adding to the trades that really do want to go face ripper, like, I mean, that was just so nice to just get a quick trade like that, have a little profit on the day. And I mean, I'd rather make a lot more money than that, but there's nothing wrong with making $500 every day. But that was my right, the right setup that I like to look for: above the open, sloping moving averages, pull back to the moving average, and then what I'm trying to do more of is buy a retest of a candle, or if you're shorting, short the high of a candle on a test. And so the idea there is to be buying a level that holds on a really micro basis. And you see, even though they tried to get it down below that, it was a false breakout, right? Based on the news, whatever the hell's going on. I have to start reading through the live squawk now, I guess. So now that NQ looks like it wants to take out this RTH high, this could be, that was like the ripper that I could have made a lot more money on. Instead, I got out too quick. I took a stop, started trailing my stop too quickly. I should have just waited an extra little bit and moved my stop up, into these levels, the 93s or something, and then see if I get that runner. We could still get it. They seem to really like everything that is happening in the world. I don't know. Doesn't matter, right? Just yeah, the only thing I had time to think about was that was such a nice quick liquidity sweep there that I figured I better at least try to take a little off. So I took one off, and then I quickly just threw in my stop on the other two that I had placed, that I had gotten in on, and then I got stopped out because the algos are just sweeping back and forth some of that liquidity. Now I should be looking to get back in, and I could just buy one here, sort of for the reason that the trade went my way. Just see if it just keeps squeezing now. You don't always have to be perfect on every single entry, you know? It's like, okay, I got shaken out. That gives me a little cushion to try to put one back on. Just call it the runner, right? Put it on, and now see if you can get lucky. This one gets both sides for today. Yep. Now it's giving us another chance here to put this back in. I don't know. Seems like a good idea, doesn't it? Should be getting long again. But my trade setup is to look for these pullbacks and to buy that test of the moving average. And this is what I mean by trying to buy a test of the low of the bar, right? So what I want to see is that this bar comes down, touches that moving average, and instead of, you can do it both ways. You can do it on a first touch. You can hope that the bots, the algos, just react perfectly off that moving average, because oftentimes they do. But you can also just wait and see where this bar closes, and then, like, so far the low of this bar is 94.25. So if you want to buy a retest of the 94.25, you can put it at 94.25 or 94.5. Often, if they're going to buy it and it's going to maintain that as a support level, it could tick 1 or 2 ticks below the 94.25, but oftentimes it'll tick 1 or 2 ticks below, and then it'll reverse and go higher. And that sort of corresponds and lines up with the way a lot of people like to, on a pullback, instead of buying a red bar, they like to see a green bar print, because that, in theory, is a tell that's saying, okay, we've had the pullback. Now a green bar has printed, which should, in theory, mean that the buyers are back in control here, and we should get a green bar, green bar, green bar, and it should go right through to new highs on the session. Because it's a 1 minute chart, you know, those assumptions, right, they often end up being where you get an ABC correction, because the algos see that all this sell stop activity starts coming in here, and so they see that sometimes they can sort of sweep this back into this 91 or 90 and a half level, and they're taking advantage of the stops the other way. Let's take a look across the board. We're back above 700 on the advanced declines. Google new highs there. Meta pretty close. Nvidia got pretty close. Tesla made a new high. Apple not looking too bad either. Made a new RTH high on that for the day. Can glance back over here and see what's happening in the YM, RTY. So some rotational stuff where they just seem to be, again, ready to buy the NQ again a little bit, is what it feels like. Sort of like they don't want to give up NQ, that 30,000 level. I think they want to get back above that again. Let's see if they can really expand this again to the upside, break out of this big range we're in. I don't know if they'll be able to do that quite yet. But look at, again, that was another big volume print. About 13,000 contracts traded on that 1 minute bar. This one was like 16,000 contracts that traded on that 1 minute bar. So do you think that's a coincidence? Probably not. It could very well be the same trader that came in with that market order. Maybe they had, if it's half the volume of that bar, maybe they had 15,000 contracts that they thought they wanted to be rid of. Too much short exposure or something. And so now if you're looking for the ABC correction, you want to see it as a measured move. So it goes 01 and a quarter to 94 and a quarter, 7 points. It only rallied 3.5 points, 97 and 3/4. Back to 90 and 3/4 should be the sort of ABC correction. NQ looks a little more aggressive right now to probably sweep the upside. If you want to try one in here, you can. And you can also anticipate if there's a stop order in here below these previous highs, a sell stop order, possibly you get an extra little sweep down into this 88 level. So there are times when I put my order in and I think, maybe I'll just instead put it in where my stop would have been. Sometimes you get a really good, precise entry. It's luck. A lot of times it's just luck. Where do the market orders actually trade through to? Because it depends on where the pockets are in the book, and that's why a lot of people love looking at market profile. So here's your volume. Your volume profile, you can see that right here is that little pocket of no volume, right? And so the concept can be, sometimes you can buy the low node and your stop can be below here, or you can buy the high of this node expecting that this pocket is where they can then probe back up into, or you can, again, formulate any kinds of ideas that you want. It's just a matter of like if-then statements and, having a quick theory about me about, like, is there enough juice in this trade, risk reward wise? Do I want to risk my money here? Do I have a good enough confidence level that this is a pullback that will follow through to the upside or not? Look at how NQ is now following through, right? It's sort of trying to dance right back up in there. So again, if you're trying to do this in a way where you're trying to match this low, there it is. Okay, now if this is a reversal and they start selling off, then you don't always want to be buying into that because it can just rip right through you. So that's why a lot of people trade the old Ross hook, right? It's you wait for the correction to happen, and then you can use a buy stop entry above this green bar because there's plenty of room back to the upside here. So the old Ross hook was you buy you use a buy stop to enter here 91.25, and then you just sell into any buying up to the previous high, and then if it goes through, you've got your runner. Joe Ross was his name. He printed some of the very early volumes of about chart trading and futures chart trading, and pretty cool stuff. And his whole concept was just like take advantage of the noise to simply cover the costs of your execution. And then if you get lucky on a runner, you get lucky on a runner. So I should have been a little more aggressive there. Called that out pretty well. You see if now we get the follow through from NQ or not. This is another way to look at it, is if this low is now in place, they took out these 2-3 bars, right? And now they could be giving you a perfect entry at what was resistance becomes support. So, a lot of people are buying them here on that little pullback retest with the stop below. And that's the concept of buying, waiting for the green bar to form, because you're theorizing that right here the buyers have taken control again, which it looks like they pretty much have in the NQ, because it's making a new high right here. It's ticking through. Nvidia's ticking through. So maybe just throw an order in there, 90.75. It could reject. Or if you want, you can try it way back down here in case they do one more sweep. Or you can try it. This is pretty interesting, the way the bigger moving average is now aligning perfectly with the open. So that sometimes can be really a perfect type of setup. Right? Because this could just be a big reversal where they take it out, or they just catch everyone now long because it's a news choppy day and they just go one way, then they go the other, then they go the other, think I'll just wait on this for a second. Flip back over and see what's happening here. And RTY is still below its open, which is interesting. Bond markets are still looking kind of bid. Tech names are looking pretty green again. Mixed board, advanced declines are 580. You know, we could just be in for this kind of day for the rest of the day. PPI tomorrow. NQ still is acting pretty well though. Maybe I'll just try one up in here. Now we got, so before what I was cautionary about was if this is rolling over, that could have been, could have been buying right into the perfect sell, you know, short sell entry, but now I'm kind of thinking I missed it. It's maybe a good idea to try getting something on again to the long side. PR, what's happening? How have you been? Right. I need you around here to keep my head on straight. So don't be going out of the country for too long. Good, man. Just been getting after it a little more lately, climbing and getting out into the wilderness. Summertime, got to take advantage. Yep. The way the markets have rotated so much, continuously rotated, it just makes me feel like global positioning is still just betting on the US, right? Like I just feel like that's the theme here. It's not going away. It's where else is all this money supposed to go? And so I haven't completely given up on the short side. I probably should, but then if I do, it'll, feel like I should have been short. But we just haven't been getting those days lately. And when I mean lately, like, I mean, it feels like over the last year or something. It's like we haven't been getting those days where you see total risk off or risk on. Maybe yesterday was like that after the news, because I wasn't around. So, but it just seems like we used to get a little more frequency of these days where you could really tell it was a risk on day or a risk off day, and you could get into trades with the wind at your back, and you didn't have to be perfect with your entries, and you'd be able to get some profit out of your legs, like, pretty easily. And I feel like nowadays it's just every day we come in, the board is mixed. There's a lot of green and a lot of red. It makes it really interesting, I think, for sure, but also confusing about, well, wait a minute. Why would rates like affect the RTY more so than the high flying tech? Like, I guess fundamentally I could learn more about some of that stuff, try to figure it out. But that's why, again, my style of trading is to watch all this stuff across my 3 screens and try to get a sense for, okay, is it going to be another moment here where Nvidia leads the charge? And every time Nvidia ticks higher, you watch Nvidia tick higher, you buy the S&Ps or the Qs, and boom, there it goes, and you have a nice trade on, right? Like, finding those little spots is pretty awesome when you can do it. And that's kind of what I like, is trying to read the charts and read some of that action to see what's the driver of the day, or is there a driver? Just reading some of the live squawk notes. That's one of the coolest features. Marlin's so cool what Marlin's done, but this being able to read the live squawk feed. I know it's a little janky sometimes, but with the conversion, but it's really cool to do that instead of having it in the background, and every time they make some announcement, you're listening instead of trying to focus on your charts. So far, a little rejection here. And I think for me, the bond markets are a big part of the tell right now. So the bond market's rejected and are moving lower. See if they can take out their RTH lows. And I would be surprised if we don't see oil 84, if not today, tomorrow. We also have oil rolling, contract roll, I think it's Friday. But interestingly, I don't see a lot of pricing discrepancy between front month and the next few months out, which I find that kind of interesting. Like, why is there no premium in this thing? There's no risk priced in. Again, I think even here. But again, that's my bias, because I want this thing to go ripping higher, the oil market, that is. So this starts to look like a pretty big rejection, which doesn't have to mean anything. It could just mean we're still in this range bound market, and they could go back down through the open. They could target the lows of the session, and we won't have done anything, right? We got other stuff coming out this week, so this shading on my charts is what I've added to try to help me stay focused on the second hour of the RTH. So I'm trying to let the first hour kind of play out, and then I'm trying to look for one or two good entries in the second hour. And then now we've kind of entered a little more of, if I had still been long and this were going higher, I'd just be managing my stop. Now it's kind of like, do I really want to enter a trade here as we move into the New York lunch hour? So I just have it like shaded in a way that, so this is the opening first hour, this is when I want to trade. So it's sort of like a cautionary thing to my, to my eyes. And then obviously this is the overnight. If you go back to yesterday, I do another trade window here from 11:30 to 12:30. That's Mountain Time, so 1:30 to 2:30 Eastern. Sometimes you miss really good trends and stuff during these other periods if you do kind of filter stuff out that way. But what I especially like is it just makes me feel more patient and more selective, and that's from a mindset perspective, that sets me up the way I really want to be thinking, is let the trades come to you. Have a good idea for your setup, even if it's like a spur of the moment setup in theory based on something. That's fine, as long as it's like you have your theory, you identify your setup, and then wait for price to trade to that instead of chasing or deciding, oh well, it didn't get to my price, so I'm now going to move my order, and then you get filled on your order, and then it moves exactly to the price you're gonna, so it stops you out exactly where you should have been getting in. And it happens a lot. If you're if you're sort of pressing and trying to always like make money and find the next trade and make, it's like it just always seems to find those emotional points in the market when you don't really plan your execution and let it come to you too. Right, so I'm watching YM is now getting back towards the open. Let's see if it holds or if they sweep it all the way back down through the RTH low. Remember, it was the one that sold off the deepest earlier this morning, and RTY couldn't even get back above its open really after the news spike in the pre-market. So you could have something that looks like this. I'll make this bigger on the YM. Instead of our ATR box being here, maybe you move it like this. Say that the high of the RTH is in, and all it can, it could come right back down to this 420 level easily, and it doesn't mean anything, right? Like all it means is that could just be, okay, where's the next extension? Where's the next emotional point that the market seeks? Everyone's getting long up here. It starts going the other way. Oh my gosh. They're watching. Finally, it gets down to here and they cover. And then that's right where it turns, because the algo math magic comes in and they just decide, it's gone full ATR. Boom, time to buy. Let's look at it on the RTY. If we ignore this overnight and you move the RTY lower and put it at the top of the RTH highs, here's your ATR box. If it sweeps the lows and sweeps all the overnight lows, an RTH, regular trading hours, ATR takes you back to 29.45. Now, when you're looking across the board, you're seeing the bond market sweep. There's a new RTH low in the 2s, 10s, and not quite yet in the 30s. But the 30s are even weaker in the sense that they're almost back to ground zero on what the CPI print is. So if the bond market decides to start selling off hard again today, then you got to start rethinking what some of your theory is on some of this stuff. And maybe what it's telling us is just that it's names like that, the small cap stuff that can be a problem. Pardon me. Now here we are back at the open in the ES and NQ. Again, we can do the same thing with our ATR boxes. Like if we slide this down and assume that the RTH high of the session is in, and you could just be in a big bathtub here. Look at crude. Perfect retest of the overnight session low. See if it can just shoot straight back up and through. God damn it. I don't know why. Remember, the opening price principle is kind of the more time it spends above the opening, the more likely they are to support it on a retest of the opening. In my mind, Nvidia is trying to make a new high here. This is a conflicting scenario for me right now, right? Because it's a nice reversal signal on the 1 minute. Swept, rolled over. You got a pullback that was sold again. Here's another really good pullback that could give you a tight stop if you wanted it. And if they decide now all the sell stops have moved below these pivots, like I was highlighting the 74s and the 72, that's a lot of alignment right there that if it fails, it could be a pretty hard fail. We just have to wait and see, or take the trade and, it's a valid setup to think that this could still reject and roll over to the sell side based on the bond markets. But when you have a theory based on another market, excuse me, just remember that if things don't act the way you expect them to, they act sort of differently than you think they should in how you're formulating that in your brain, and you took the trade, and don't be silly about letting your stop get run over. If it starts acting opposite of what you think, then there's a good chance that the rest of the market is theorizing the same way, and there's a good chance that the algos are reading that positioning and they take it the other way. So if that's what happens, don't worry about letting your stop get run over for 10 or 20 points or whatever. It's just, once the trade setup seems to fail, you can take a stop just by getting out, and you might get out at the wrong time and then it goes your way. That does happen, but you can also just save yourself a lot of money if you have an idea of, maybe it's a new stop that you use plus a technical level, and maybe your technical level gets hit, which is like a mental stop. And if you see that happens, maybe then if price goes back to your break even point, you just get out at break even, or you put your, tighten your stop to break even as, in case you get lucky on it. And my dad always used to like that a lot. He would say, he would use the Bollinger Bands a lot, right? So he would have his moving averages, but with the Bollinger Bands, at the standard settings, whatever, 2 standard deviation. I think it was like a 13 and a 26. I don't know. I'd have to go back and remember, but he would just say, like, if you're entering at the moving average and price goes all the way to the other Bollinger Band, then that's a failed signal. And if price comes back to the middle point, the moving average, that's going to be pretty close to your break-even entry point. Just get out of the trade. Just in your brain, he would say, it showed you that price moved a full 2 standard deviations for that time frame. It's all based on whatever chart you're trading. You would say, it just showed you that it's sort of a failed setup. Now just look to get out and save yourself the money. I kind of like the notion that you kind of give it a little extra time, because if it's like a false, if it doesn't look right, but then it suddenly trades back your way and now it's moving in your direction a little bit, it could be that we just trapped everyone long, see? So even if you're, you can sometimes move your stop to break even so that it doesn't go against you again, but then stay in the trade and you still might make some money on it. I've kind of like over the years gone to a scenario where like it's like I almost would rather just get out on stops all the time. But then, like I talked about earlier this morning, it is helpful to have some limit orders way away from the market in case you get lucky on a profitable trade and it only gives you that one little moment to get out. And oftentimes they're just sweeping the liquidity, which means it's everything in the book. So unless, you just barely miss it because they didn't quite have enough enough there to hit your order, you can still quickly move it and get out oftentimes on a quick retest. Look at that rejection by Tesla, right? Sort of now eyeing lows. Again, it's the bond markets here. Okay, let me show you this. Here's the 2s, the 10s, and the 30s. Here's the CPI print. Just a little thrust here to try and get up into that area of the tail, and then it rejects and comes down hard. Now you've got all of them basically making new RTH lows. And if they reject a lot harder, then this market can go right back to sell mode. Crude trading 79.70. So still above yesterday's high. Has the 150 day at 78.91. The last month's open was 88.5. Got some other numbers up there. The 50 day is at 87.15. The projected downslope coming in at 86.5 on crude. Wouldn't be surprised if they don't pin the contract roll to that number somewhere in there. Okay, testing the open again in ES. I'm through it now in NQ. Where are those trigger points? Remember, 74s and 72.5 in ES. In NQ, I gotta believe that heavier trigger point will be below the 5-day moving average and the pivot. So the 5-day comes in at 648, the pivot at 619. Now, oftentimes when they reject and they start selling hard, it's below the pivot on for the NQ. Advanced declines did make a new low there at 450, and then they quickly popped right back up to 680. Now trading 640. I'm looking through a couple pictures from yesterday. I should try to share some of these with you guys. These are pretty good. How are you guys feeling? You again, anything else here you're looking at, wondering about, want to discuss, or just on my side and what I try to do here? Yeah, I think so, BD. the high speed algos have chopped me up so many times and for so many years. I mean, can we start taking money from them from now on? That's sort of like yeah, I agree. Yeah, that's like, I think David was just talking. Yeah. Very wiki day, lots of movement, but not smooth trading from David. It takes time to kind of understand and figure out sometimes like what that means. What does smooth trading look like, or what is, and I guess one thing that I would caution people on in that regard is, this is what happens to me, right? Is sometimes when I get hyper focused, like in a bad way, I'm too focused on the dome. So as a word of caution, like, I like using the dome to trade, but if I'm looking here at the dome and I'm just totally always focused on how this movement looks and what the pull stack is and all this kind of stuff, it's just a really good tell for my own psychology that I'm getting really overly zoned in, and in the granular and the super granular. And that's why I like the chart trading features for sure. I like the dome too, because sometimes what I do in using the dome is, instead of using a market order, like let's say I wanted to short one here, but I wasn't wanting to wait for a pullback. Let's say I just was like, oh, I missed it and I want to chase, and I'm willing to chase because I was really focused on the 74s and the 72s. And I thought that if we broke that level, especially with the bonds selling, that I'd want to be short, right? So maybe I just want to at least have one contract on so that I can make sure I don't miss a move if that's what happens. Instead of just selling at the market, you can sell in the ask column with a limit below the offer, below the bid and offer, right? So I can just left click this right here and it'll sell at whatever the limit price is, right at the bid, basically. I think there's buttons you can do that with too, but I kind of like it because I can sometimes I can hover my mouse like here in the column, instead of putting in a limit like this. Oh, I have it turned off for the time frame. But instead of putting in a limit like this, you can just hit that button and in the column, and it'll just fill you at a limit so there's no slippage really, other than wherever the market is trading. Right click. Oh yeah, nice, Niels. So yeah, here's your different things right in here: buy or sell, stop or limit. That's awesome. That's awesome. And these green, if you guys don't know this, these green and red columns are where you put in your chart trading orders with Niels's trader platform. So see how when I'm hovering in here, if I wanted to short one right here, it's showing me that at 75.5. What I like is I can go here, look at, here's my moving average is sloping down. If I wanted a one touch of that, it'd be like 77.25. But what about this bar right here? So you can also left click, hovering over that bar, and it shows you the OHLC and volume, right? So that's really cool too, because now I can look at this bar and see that the high was 76.5. Well, if I'm trying to enter at the moving average and I'm trying to short a test of a high of a bar, then instead of being like a few ticks above it, the theory, right, is that I'm trying to short a retest of that bar, which is, this was support. It now should be resistance. And oftentimes what they'll do is gun right up to it. Sometimes they'll tick one or two through, but you can use that as just a way of entering in a really perfect scenario that would come up and fill me and barely tick against me, and then just boom, the sellers start coming in, they sweep it back down. Yeah, this is the order column. Let's see, hide buy sell columns. So that toggles those on or off. And then let's see which is so these are the order. All of this information can be toggled, see, over to the left side or to the right side, or you can hide it. So now you're just using the chart entries, and you can still right click on the chart if you want to put in a buy stop above the market, right? I like seeing this column here because I like to verify that if I'm chart trading, for instance, I've got my trades set up where if I get a fill, my stop automatically goes in, and then right now I've got it set really tight, right? At this is 8 ticks. But so if I wanted to use a wider stop, you can then just click that, put in like, say, a 10-point stop is 40 ticks. And then if I got filled on a short, my stop would automatically go in at plus 10 points. So what I did was I didn't put in this into Delta Trader, but I had it set because I had previously gone into Rhythmic. So I had it set to filter me out to not trade during this time frame. That's why when I'm trying to put in an order right now, that's like it's a rejection of that order. That sound that you heard. But yeah, there's all kinds of these other cool things that Niels has done that I'm using more and more of. If you go in here to your plus symbol and hit the risk manager button, read all this, except now I can, I'm only connected to my personal account right now. So So it's just what you're seeing is just my one account. But this is pretty cool too. You can put in your max loss amount. This is really cool. Put in your max position, say 6 contracts on the ES, then put in your max order 3. You can click on a trade window. Well, I can't because it's currently kind of locked out, I think. But then these lockout buttons are awesome as well. And I think this is where you've heard Manny talk a lot about stop loss protocol, or I like to use it for take profit protocol as well, where as soon as you exit a trade, you can come in. Hey, Niels, awesome. You want to talk us through some of this too?
I mean, yeah, just I figured that would be a little bit easier.
Yeah.
So as soon as you take your first trade of the day, it will lock your settings. So because you already traded, it will show a lock
right there.
It will reset again at the end of the day, at the end of the session. And then the lock is gone, and then you can change it for the next day or whatever.
Yeah.
But it's meant to lock it, because otherwise you can just change it to intraday, right? Like, let's say you're blowing up and let's say your max loss is at 1K and you're at 1K. I'm like, oh no, let me just turn it off and put it to 2K.
Yeah.
So that's not possible then. So,
No, I've done that before. So
yeah, everyone. So that's why you have to wait till the end of the session, and then it opens up again, and then you can change it for the next session.
Gotcha.
Yeah.
And so, but I can still use right now
lockout. Yeah.
The lockout feature. This is really cool, because if, let's say I took that short, look at that. It got to the 76.5, it barely ticked above it, and then gave a little selling. So we could have done that, taken that trade and made a little dough on it. Well, let's say you get stopped out, and then instead of getting all emotional about it, you just hit this, say, 15-minute lockout button, and that literally will not let you trade for 15 minutes. Or 30 minutes, or if you hit the end session for the day, it locks you out for the remainder of the day.
Yeah, it will reset end of the futures time. Yeah, so 5 p.m. Eastern.
Yeah. So this right here, this functionality, I'm telling you, over the years could have saved me tens of thousands of dollars.
Same.
So it is really cool, and I think you've just done such a great job with this platform.
Thanks, and there's more coming actually.
Yeah.
So,
what's the next stuff that you're?
I'm right now we have an update pending for more performance improvements. So there's one. We have an opening range indicator going on. So the Dalton stuff, but then it does automatically plots what kind of type of day it is, with projections of the targets.
Nice. So that's kind of like what I'm doing with my ATR stuff? You know what I do with my ATR, these boxes I use?
Could be. Yeah, I just implemented the way that Dalton uses it in his market profile book, just that approach.
Oh, gotcha.
Yeah, and yeah, pretty much like that. And then of course the zone decoder keeps being improved. Had some really good levels again today, so that was really very nice.
Nice. Did you trade the open today?
Sorry?
Did you trade it today this morning?
Yes. Yeah, I did.
Nice.
Well, mostly nice. Yeah, I was down before I was up.
That happens, right?
Yeah, but it was mainly just not being patient, and I should know better, but it happens. But yeah, at least I was on the right side of it. But still, market moves so fast now. It stops you out in seconds. I'm like, okay,
I know.
Right? It's crazy.
And that's why I'm starting to try to embrace this technique a little better of using stop entry orders.
Yeah, it makes sense.
And getting lucky like I did with a market sweep.
Right.
And then just quickly taking it off, or
right. Yeah, but you could do that. But then I would set a bracket also, like if you can measure how big they are like often, then you set a bracket right away. If you fill, then you get an instant fill of like 8 points or something. And because always it takes back, and then you always miss the high. Right. So yeah, if you set a bracket, if you set a take profit bracket with it as well, then you get your fill. It could be a high one. I mean, you can then always still move it lower.
So what you do there is you click on that button, you toggle it, and then you.
Sorry, I don't see where you are with your mouse. What do you mean?
Oh, I was just showing it on the screen here on the right side.
Oh, there, yeah, that one. Yeah, exactly.
So you toggle this, you put in your profit amount.
Yeah, exactly. So
like
10 points.
On this one, I would have a stop loss of 8 ticks and a take profit of 40 ticks.
Right.
Wherever I was filled from.
Right, exactly. Yeah.
I know. I do think it's worth probably doing that, because even if you don't get filled at your take profit, you can then adjust that order, and it's still
of course you can adjust it right away in the dome or in the chart or And
if you don't want either or both of those on, then you just click that and toggle it.
Right.
Click that. I think there's a button up here to toggle both, right? Somewhere.
Sure, on top left, yeah. On the left, yeah. It's like the little triangle thing.
Oh yeah, right there. Toggle brackets, and then it turns them both off or turns them both on. So that's really cool too, because it's quick.
I prefer them as I'm always on.
Yeah. I mean, I know sometimes I get like annoyed and thinking, oh, they're always like sweeping our stops, then I don't put my stop in.
They are, but they are, but like it's
just part of trading.
Yeah. But like you gotta have a stop, right? Like, what's the limit?
Yeah.
Well, the limit is a margin call, but like that's not so nice. So
no, it isn't.
So you gotta have a limit. You can always get back in, but at least I think you should at least define your initial risk, even though if they sweep it right out. But which happened twice for me today. I got swiped out at the fucking low. Sorry.
Yeah.
But the exact low tick, and then I'm like, no, you're kidding me, like twice, and like, wow. So that was very annoying. But yeah, I got back in, and then made it up and then some. But yeah, it was frustrating.
Yeah.
Yeah, but what do you do, right? If it does run through you, then it can triple your loss or something or more.
Right.
So like, I don't want to do that. So yeah, it's tricky.
It's always tricky.
Yeah. But yeah.
No, it's gonna. Oh, and the other thing that I really love about your platform is how it cancels all my orders on Flatten.
Right. Yeah.
So if I get filled on my stop, or if I get filled on my profit, if I have any other orders in the book, it just cancels everything, which is, I think, just super good safety feature. Because sometimes I'll put some limit orders really far away from the market just to have them in with a timestamp. Like if I think it's a trending day and I'm gonna get my runner, you know, I've got it like 80 points away or something like that. And so unless you're like scrolling, or you can use the order window too. Where is it here?
Yeah.
You can use this and see if you have a working order in.
Right. Yeah.
As well, but it's just like a really nice safety feature where you don't have to worry about. Let's see, where did I get filled on those? 93, I got one, and then stopped on the 89s.
Yeah.
But yeah, I mean, there's always more to learn with the nuances of all this stuff, but it's just, I've been so psyched and impressed to use your platform, dude. It's amazing. So keep it up.
Yeah. I will, because I'm also using it myself, right? So.
Right. Yeah. That's what's cool. Well, it's probably a pretty good time for me to take a break anyway and get some food.
Same.
And
doing some tests on the development server.
Nice.
Yeah.
So I'll go ahead and sign off, and you're welcome to stay on for a bit if you have anything else you want to cover.
No, I'm kind of busy. I just wanted to chime in because you were talking about the risk manager.
Okay. Yeah, no, I appreciate it. So
Cool.
if I pull that back up, so here it still gives me, I've got 5 minutes of lockout time on that 15 minutes.
Yeah.
And then you can also does for you when you get locked out.
Sorry. You can maybe also show the warning, because if you want to try an order in that account, it will give you a pop-up.
Oh, right. Yeah.
Anywhere on top of the dome or something, not to fill or.
Yeah, I think I've seen that before.
Oh, maybe it's not showing up because there's a pop-up, but I don't see it on the stream. But it did do it. Yeah, rejected. Risk manager. Yeah.
Or details. Yeah.
No, if you just click an order in the dome, it should have a pop-up in the middle of the screen. Because you're not allowed to do an order right now. So it's just that one, yeah, exactly.
And that's what it'll do for you too when you try to exceed like your size limit.
Yeah, same. Yeah, exactly.
Which is nice. It's kind of like an in-your-face, like, hey, you're trading too big for your breach.
Exactly. Don't break your own limits. It's just very easy to do otherwise.
Yeah.
Cool. All right, Bo.
Well, thanks for chiming in, and for everyone else, let me know if you have any questions. I'll I'll keep sharing my charts for a little bit here just while I'm kind of finishing up. And if you have any questions, let me know. I'll type in my room, the link to my room, and my website and stuff too. Always glad to help if I can. So hopefully that was a helpful session to somebody somewhere out in the Uberverse. Stuart, good to see you again. Hope you're doing well. And yeah, you're welcome. And thanks for listening, everyone. Hope you have a good afternoon session. And for the rest of the week too, it's going to be good. I think the trading's going to stay good for a while. So let's make some money. All right. Cheers, everybody.